I was looking at the option board last week, and at least from what I recall seeing there, can you see the CME group option board?
Yes.
Okay. It seemed like this thing was, at least to the degree that if the bankers would get their wish, their ideally targeted would be 23 bucks for silver. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on quite an interesting day, Monday, January 24th of 2022. Excited to be joined with Nathan Fisher, who is a first-time guest to the show, although we've been in contact for quite a while. And Nathan, I know you're active on Twitter as well. So first of all, welcome on in. How are you today, my friend?
Glad to be here.
Well, sounds good, and I appreciate you being here. Nathan, I have a feeling if we were a couple of years into, even maybe weeks or months into the future, there was something about the financial markets today. I think there's a book or two that could be written about that once we know what really went on. Feels to me like something broke, perhaps in the credit markets. I don't even know what, but any case, we'll dig into all these topics as always, not legal license financial advice, but just two students of history and finance. Nathan, would you like to share your background and what led you into all of this?
Well, my background, I actually work in IT as an IT manager. So it's not related to a lot of the guys that work on Wall Street and have this stuff as a background full time, of course. But for years, I went through business school. I got an MBA, but that gave me a good curiosity with a lot of this. So a couple of years ago, when we had all kinds of problems with the repo market, that's when I started really digging in. And that's when I started finding you guys and Mike Maloney. And I fell in love with silver. My dad was involved with silver during the 1980 stuff. And my mom was a foreign exchange student in Peru. And she actually brought a bunch of silver back from Peru in the late 60s. So I have a silver pedigree, if you will, within my family. And when I discovered it again in 2019, I just went all in. So.
Well, it's nice to hear and makes a lot of sense. Although one thing I'd love to start off with, and I will pull up the chart in the background here. You're mentioning the credit markets and those repos, and that started in September of 2019. Is that correct, sir?
Yeah, I was tracking, I think, September 16th. By the time I read about it, it was sometime in October. And I remember in business school, like 15, 20 years ago, understanding what the repo market was. And when all of a sudden that these banks wouldn't lend to each other, I was like, wait a second, you won't lend to somebody overnight unless the interest rates are jacked up. So it kind of gave me a little bit of pause as to what they were using as collateral. And these banks weren't trusting each other. This whole thing was about to fall apart before I guess the Fed stepped in.
So you could say that the system was falling apart, the Fed stepped in. But at this point, what would it really take aside from a 1,000-point down day, which Billy Babe Ruth Holter, I know you didn't hear that one yet, Nathan, but he called his shot in advance in this. He actually said on Thursday, something feels close to breaking. And, if this or that happens, I'm going to be surprised to wake up and there's a 1,000-point drop on Monday, which we saw. Then for the market still to finish positive. And, as you're talking about repos, I wonder if we're about to finally see, maybe like maybe that's what, and who's finally flown here to Mexico. I finally got to meet the Silver Chopper Ben. Holding myself. He's a weighty little beast. So Nathan, you can see the cockpit in there. He's flying, throwing $100 bills around. Have we reached that point? Do you think that Ben or the Exchange Stabilization Fund or Federal Reserve was spitting out cash today?
Well, it did look like some sort of invisible hand was happening. I don't know exactly what happened, but from what I guess Twitter was saying, where it was that it's possible that the Fed might kick back the interest rate hikes for a couple months or so, something like that. And all of a sudden everybody's like partying. And I'm like, I've never seen an 1100 point recovery, 1200 point gain or something like that in virtually no time at all. So that was just astounding. The whole day gold was up. So, it's great. All of the markets start to recover. Gold is hanging in there. Silver starts coming back a little bit, and everything recovers except miners, of course. So, still waiting on that.
Well, it's interesting you mentioned that, because let me see if I can pull up, give me a moment, I'll pull up my silver miners chart, because I was looking at it after the close and I see the stock market finished in positive territory, although here we go, let me pull this one up. It's not quite the same for the silver stocks as you can see here. There's First Majestic down. You able to see that now, Nathan?
Yeah.
Down 5%. Fortuna back down to 351. Endeavor down another. Now they were down more, but again, you have the stock market. The thing was down 1,000 points and still finished up.
I don't have words for that. It just,
so that's right. That, well, I got you covered, fortunately. Available for pre-order soon. Let's see. Stunning comeback. Here's the silver stocks. Now here, partly I looked at my trading account today, and as soon as I logged in, like something didn't make sense, because there's just you can tell, like when you're trading, like there's I knew silver was down. And it was interesting. There were these Goldman Sachs weekly puts that I bought on Friday based on what I agreed with Bill I was feeling. It was like something I'd bought for a dime that was over $2. And I was like, oh, what the heck is going on here? And that was when I flipped over, and then sure enough, things were down. Stunning recovery. Wow. Although can you see this screen here?
Yes.
All right, so there's Netflix. I mean, you see how, wow. Let's look at, geez. Okay, here's Goldman, which was almost flat on the day. I think I was able to sell one or two of those. Let's see, one day. So started up here where the open was 333. So is that here? Okay, so quite a down to 326, and then up to 343. Did this thing actually rally on the day, or no? Maybe it just the previous close. What was that? All right, you get the point anyway. Bounced, not caught in the financial sector. So, Nathan, any thoughts on any of that?
Well, we saw Netflix get killed the other day, and I think many of us saw the cryptocurrencies start to get murdered on Friday. And it was kind of evident that there was some disaster about to happen today, but I don't think anybody could have predicted what was it, a 1,200 point swing. I don't think anybody could have predicted that kind of rally. So well,
that's not true. You didn't hear Bill Holter's call. He predicted it, and I agreed with him. This was last Thursday. Now we did not say that it would go back up, although I'm not surprised, because who knows what the Federal Reserve was doing in the background today. Would you agree? You and I both talked about the plunge protection team was most likely involved. Is that fair? I don't want to put words in your mouth, but
yeah, it's hard to tell, because was it the words of the Fed, where they're just going to say, hey, we're just going to push off interest rate hikes for a couple months? Was it the plunge protection team? I can't tell you. I was too busy working all day today. But you bring up your screen every couple of hours or so and you look at it, you're like, what in God's earth is going on there? So it did look like some sort of invisible hand of sorts. So,
and we also have the people running the Federal Reserve. Some of them are quitting as they're getting caught for front running their own policy. Powell, I saw evidence, I don't recall exactly where it was from, but I read through it, and I would say that certainly warrants more questioning, which I know they said that Powell is doing an investigation, so I'm sure he'll report himself for felonies sometime soon. Could maybe someone check on that, since there's a lot at stake? And Nathan, it's interesting. I'm reading this book about by Robert Kennedy about the history of Anthony Fauci, and how there was clearly, there's people who are getting sick and dying that have the vaccines. There's a lot of reports. I haven't personally seen someone have a seizure and keel over after getting it, but I've seen videos that show or imply, I don't know if they're fake or doctored, but look like some people are really getting hurt. The book about Tony Fauci makes it seem like he was involved in a lot of things, but let's say specifically, it is or should be aware that people are having adverse reactions. And then I see Joe Biden to double down on something over the weekend. Here's another person who is, or at least should be aware. He's, I think it was the vaccine passport. And you have this all add up and then see that in the market. And then, I've not wanted to alarm people unnecessarily, but I mean, these are some concerning trends. And if you care to comment on any of that, or I could skip to the next question if you prefer.
Well, I'll tell you what, I think most of America wants to kind of get on and get over with the virus. And at this point right now, obviously there are still people dying from it, but it is more or less right now like a flu or a cold for people that are getting it. So that's good news, because it seems like, the virus is potentially burning itself out. But when it came to the vaccines and stuff, a lot of people, they start with that whole, anti-vaxxer stuff. And it's like, well, it doesn't mean you're anti-vaccine, because it's not really technically a vaccine, because they actually change the definition of a vaccine. So I wrote up something about that a while ago, but I think it's actually helped a lot of people that were elderly to, sustain life a lot longer than they would have. But to force something like that upon someone, I don't think I wouldn't advise that as the best course of action as a politician, and I'll leave it at that.
Yeah, I think that's well said, that hopefully people will be able to choose things. And we'll leave that at that. But anyway, Nathan, I know you have done a bunch of research, especially we have options expiration, the silver market coming up this week, right?
Yeah, and I think that's what we want to talk about a bit. So do you mind if I grab your screen here real quick?
Well, can I show one and then you can comment on that and take over? Is that okay?
Have at it.
All right. So I was looking at the option board last week, and at least from what I recall seeing there, can you see the CME group option board?
Yes.
Okay. It seemed like this thing was, at least to the degree that if the bankers would get their wish, their ideally targeted would be $23 for silver. We'll see if that's changed. And again, where are we? I think we're at, let's see if this is updated. So we're at $24 silver now. And not that this is cut or dry, or it could change, but my general rule of thumb is the open interest. If you imagine the numbers, usually the banks are heavily short these because they're writing contracts. And if you can pin something, if you buy the 23 strike call and put, let's say the bank sells those and they collect the premium on both of them, and if they finishes right at 23, they collect the insurance policy, and that's the best case for them. You crap out. So made several other videos discussing that in previous calls in the past. But Nathan, can you explain what day is it coming up this week?
It is Wednesday, I believe, at 1:25 p.m. Eastern time.
Right before or after the Fed meeting, right?
35 minutes before the Fed meeting.
Okay, well, at least none of the Federal Reserve governors are former Goldman Sachs officials, but we'll see how that goes. So, all right. And you said it's before or after the meeting?
The expiration is before the meeting. I believe the meeting's at 2 p.m.
Okay, so it's
And then, as you
before-
know, 2 o'clock in the 2 o'clock, they always hit the metals hard. Of course, everyone's read everything and thoroughly digested it before they hit the sell. So
Have any of our Arcadians out there with some time on their hands looked up Jerome Powell, Nancy Pelosi, and her option master husband have been trading silver options? I'd love if someone could find out if Rosti, I'd love to look at his portfolio. That would be fun. Nathan, have you seen the site congresstrading.com?
no, but I've seen some memes which talked about who outdid the S&P, and you see all these congressmen up and down, and you see all these people that outperformed the S&P for last year. I mean, it's red and blue up and down, so it's not by one party only.
Well, I'll say this. I'll show my portfolio in trades if Rosti shows his. I mean, that's fair, right?
Mine's all silver miners, so
Yeah. So anyway, you can see open interest here. Start with the 2200 line, 134, 108, 201 at the 40s. 505 at, now these says 2300, insert the decimal, $23. So big position there. Now, if silver finished $2,300 or below, these calls would finish worthless. Correct, Nathan?
absolutely.
All right. So we see it to 23 quarters, a 221 burger, 469 and 675. So certainly with silver at 24, if that was if indeed the person or the groups that were short that were able to manipulate it towards a certain price, you would think they would want it. So far it looks good, lower than 24, and another big chunk at the 24 quarters. The halves 566. Wow, 702. Heavy action on this one.
Every month, take a look at the $50. Every month, somebody's throwing some stuff out there.
At the what?
At the $50, you can see every month
Is
people are throwing.
activity on the $50 strike?
Yeah,
Oh my God. I never
every
even looked at that.
every month I see it.
Wow, 324, 493. Wow, fantastico.
I guess they figure if it moonshots, they're gonna make a killing. So why not? It's probably cheap.
Yeah, well, that's why I like doing my options and not financial advice, but on the miners where if you had a squeeze, but it's like the COMEX, they have a history of screwing their customers. And if anyone from the COMEX wants to come on the show, I'd love to talk to you, but I'm not expecting to be popular. Okay, where are the puts? There's the calls again. So all right, so Nathan, with the puts, let's start higher up. If I sell let's say silver's 24, if people often buy puts because, hey, if it drops below that, it could serve as insurance protection, right? So
I think last month, didn't you call it so it was both the calls and the puts expired worthless? Was that last month of them? It might have been 2 months ago.
It seems like it's just about every month.
It was pretty impressive.
And these are the clues of how, it's one of many inputs. But all right, not much on the 25 put line. So you could say if the banks were short, let's say if one bank were short every open interest, then they don't lose that much if silver goes below 25, whereas those calls, let's take a look back. All right, 702. So you would say there's an incentive for if there were one or a group of collusive writers, maybe if Jeff Christian wants to come on the show and talk about that. So just 51 puts. So then 184, decent, but not as much as the calls. The 24 line. You have that 24 burger there. 275, 2350. So this is a little different than last week. You could say that you do have, 24 would certainly be better than 26, but that's where the puts start building up. Certainly 23, I was thinking would be a sweet spot because that's where you have, another chunk of puts. Then obviously you get down here. So then how many at the 22 line? 443. So Nathan, does that make sense why I'm in what I'm saying, that if someone, let's say one entity was short all of these options on the board, 24, or maybe somewhere between 24 and 23 would be a sweet spot, and that 23 especially, these would expire worthless and they would have to pay out the 24 this. But when you again look at these sizes on the call side, which I will review real quick and then let you comment, 505, 2350, 469, 675. So while you would lose some on the put side if you went down to 20, like if you saw silver down $1 tomorrow, wouldn't be shocked. 675, 469, 23 could be a good sweet spot. Anyway, Nathan, why don't you take it from there? And then let me know when you would like to share the screen, and I can, if you want to see this or comment on this before you take over.
Well, you know what? I have a little bit of a different methodology because I mix in some macro stuff with this. And I mean, you're spot on with 23 is definitely in the cards, but I have a little bit of wrinkle in this for this month. I think that 23 may have been what I would have banked on previously. However, I think this week is a little bit crazy. And with that, I'm probably thinking it's going to be finishing just shy under 24. With that, let's see. Do you see my screen right now?
Yeah.
Okay, try to do a screen. Let's try it again. Let's do, there we go. Okay. Says you can see my screen. I don't see it red.
I see it.
Okay, perfect. Okay, so I'm not going to go deep into these charts, but this is something I had done on Palisades Radio about 2 months ago with Tom. I went through these.
Great channel, by the way, and thank you, Tom, for all that you do. So I'd like to mention that.
So this was the pattern that I had noticed was over the course of about 18 months or so was, as you know, every couple of days before options expiration, you start to see the prices start to get smashed. And I track this somewhere around the 18th to 20th every month, somewhere around there, give or take. And every single month it drops $2 to $3. Then you have options expiration. And then once you know, you have a recovery of $2 or $3. And this has been trading in this channel or so for the last 18 months. But one of the very interesting things about this is that this has been on a risk on environment. So it's been very easy for them to short it. There's news that comes out, retail sales up 0.001% and everyone's selling silver because they're scared. No, it's kind of ridiculous, the narratives that you hear on this. But this past month, it looked like something kind of broke. So if you look on this, you can see where when the November options expirations happened, it just kept going. It didn't recover. And it ended up going until mid-December. So last month, in December, when the options expiration came up, there wasn't enough suckers to get back in yet to kind of rinse them all out. So it kind of looked like it just rose up through options. It didn't, it got taken down, I don't know, 40 or 50 cents or something, but nothing crazy. So to me, it kind of looked like this pattern was broken a little bit. So that's kind of the overall backstory here. I know me and you have been exchanging emails off and on, I don't know, 6, 12 months, talking about a lot of this stuff that most people have started to see this pattern develop. And now, hey, let's trade this. Well, now all of a sudden people are kind of aware of this. And well, I think things are about to change a little bit. And
Nathan, just because there's certainly a lot there in the chart, and I noticed the box up top in the red text, could you perhaps read that? Because in case people haven't had a chance to settle in
Sure.
on that, I think that would establish what you were leading into.
So the title up in there basically says average over 16 months is a $2 plus drop from high over 7 trading days starting the 18th to 20th of each month. So I was tracking the averages and how many days, but it's between $2 and $3. It's usually killed. You can see on this chart, sometimes it was $5, sometimes it was $1.50, but you can see this pattern leading up into options expirations. And this is where you and myself and others start looking at that COMEX, and we can find where they want to take it to. So I think that pattern might be breaking a little bit because last week something happened that was very interesting. We saw on Tuesday was the 18th, and it's when I started to think, hey, look, silver's been up a little bit, so it might pull back a little bit. But there was word that I guess 4,000 contracts were bought in a couple minutes, and then it looked like it caused some sort of silver short squeeze of sorts. So then people were like, who is this whale? Who's buying this? So this tied in with something else that I had written last week I wanted to discuss. So the next thing, before I reveal my final price here, but it was something else I had written about, was Ted Butler and the 800 million ounce short. Yeah. So I went through that with like a fine tooth comb, and I tried to look at the evidence he was looking at. And basically what you have on here is that OCC report that he brought up that he was looking at. And you can clearly see that Bank of America is $18.2 billion into derivatives in metals, particularly in leasing, but it doesn't say what mix of gold and silver it is. So keep that in mind, because Ted feels that this was all turned around and then sold short. And if you have $800 million, 800 million ounces of silver sold into our market this past year, we would have noticed. Like, as you're probably aware, like every time you heard people talking about silver, it was hard to find. Premiums on 1,000-ounce bars went up. So if you're dumping 800 million ounces into this, and this report here has nothing to do with COMEX. It's highlighted. It has nothing to do with futures. So what this looks like is, obviously it looks like Bank of America had leased metals, but there's nothing on this report that says they sold any of it short. And that may have been the conclusion that Ted went to. It's logical. I mean, what else are you going to do with leased metals? But part of me feels like they were kind of sitting on this pile of silver, and if it started running up, maybe they sell it. And if you're selling short borrowed metals, what do? You hedge it long on the futures. So right now, if you're Citibank or JP Morgan or HSBC and you're sitting on millions of ounces of silver, what do? You don't want it to lose value, so you short it on the COMEX. And if the value of the metal goes up, you win on the value metal and you lose on the short on the COMEX. But the point here is that I felt that this may not necessarily be 800 million ounces. Maybe it's 100 million ounces of silver and 50,000 ounces of gold, whatever it is. I don't know what they did. But the concept here is that it is possible that Bank of America was able to then go long 4,000 contracts in a second. And that is what it looked like on Tuesday, because they have position limits. So you can't have an Elon Musk go out and buy 1,500 or so contracts or 2,000 contracts, because you have certain limits. I don't know what that is today, but 4,000 contracts is more than the limit. You're probably aware, if you're doing proper hedging, those limits don't really apply too much. So if you're Bank of America and you just sold 20 million ounces to someone who needs it, you're going to turn around and then you're going to hedge that long on the COMEX. So you protect from the upside of silver going up. So one of Ted's conclusions was that every time silver goes up $1, Bank of America loses $800 million. And I don't see that with this report. And Ted's been doing this for 30 or 40 years, so I'm probably wrong. But it looks like there's a possibility here that a whale is sitting on a pile that they can sell short at any time and go long on. So that being said, is when the 18th of the month happens every month, you start to see the price getting pushed down, and instead it caused a short squeeze. So to me, it may have sent some sort of shock across the bow of, hey, don't go that deep shorting this or we will make you pay. So it's possible. So that was part of it. I felt like there's a possibility that there's somebody out there, whether it's Bank of America or somebody else that is looking to play this game this month. And to me, since then, you haven't really seen silver getting smashed down. Now today, everything got hit. But if you've noticed, I mean, silver's recovered up to almost $24. So with that, I also went like yourself, but what I do instead of going up and down the COMEX thing, the COMEX page, I take a lot of it and I throw it, I dump it into Excel. And for me, when I'm looking at this here, this is where it was when I was looking at it yesterday. I actually wrote an article about, I wanted to document all this stuff. So whatever happens, if it finishes at $23.99, great. If it finishes at $23, I think money goes to you. So on this, I kind of look at it by probability. What is the most likely to drop? 24 is definitely most likely to drop. And then I kind of, the lighter gray here, you can't really see the numbers too well, but I said between 24 and 23.50, it looks like it's possible they can go after that, but you need to spend more and more short fuel to chase down 23.25 and $23. So part of that was, I was kind of feeling like there's a lot of risk if they're starting to go deep short on this. And with this, I made some comments here that this is now potentially risk off environment. Now today, obviously we talked about the markets recovering 1,100, 1,200 points, but in a potential risk off environment, what's going to happen? They're going to start buying bonds and the rates are going to go down. So you go from 1.84 down to what? 1.3, 1.2. People start going risk off. They're buying all kinds of 10-year rates start going. The rates start going down, and with that, you start to have some tailwinds for the metals. So, are you going to start shorting silver into a week where the 10-year could drop 10, 20, 30, percent points, if you will, basis points? Are you going to short into that, or are you going to be a little bit cautious? And not only that, I'm thinking last week with the stock market going bananas, that it's very possible that the Fed could have some sort of ease on delaying the interest rates. I even wrote about that down in here yesterday, that it's quite possible that where did I put that at? But it's quite possible that the Fed would then change some language and delay rates, and that's exactly what they did. So with that, if the FOMC minutes are 35 minutes after close, and you think that it's possible that the Fed is going to be dovish, are you going to really spend and go real deep short only to get blown out about an hour later? So it's possible that there's some neutrality here, that I think 24 is going to fall. But in my writing that I did, I said that there's just too much. I think there's just too much risk of them really going real deep down to $23. And I think if it was a complete risk on environment, 23 is definitely in the books here of possible to be done. So with that, I don't know, some of the things I wanted to question is, I don't know what the lease terms of Bank of America with whoever they leased it from. I don't know if it was from JP Morgan.
Nathan, if I could hop in for a second. Fortunately, we do know. I'm going to take the screen share for a moment here, because here's the delivery report. You see previous December. Now, at least with Google, these guys make it I find it challenging each month every time I look up what the actual contract limits was. The last I saw was 3,000. I'm pretty sure there's one of the videos I've made where we could see that. I don't know if it's changed, but
they moved that around.
In either case, here in December, you have JP Morgan clocking in at 6,500. The same month, they were fined $200 million for evading regulators. A year or so after, they paid $920 million. for crimes that were committed years ago. And you're familiar with what happened last year on Silver Squeeze weekend. And then what we do have confirmed by their own reports, here's 4,949 contracts, Bank of America, that they issued, which means they delivered. So that's about 5,000 ounces of silver and 5,000 ounces per contract. So how much is that, Nathan?
25 million.
So Bank of America is shown delivering 25 million ounces of silver. And so that's what is public. And one other thing that I might add, now here they are, they're buying it back 1,800. So why is Bank of America trading silver? Although, Nathan, to the other thing that you pointed out, I respect a lot of what Ted Butler has done. There's also things about Ted Butler that I've had big issue with that I've raised to him, where I think that, there's certain things he's correct about. There's certain things I disagree with. And I also think he presents certain things as fact. And I've tried to mind my own business about that, but I think that's fair to say. And so at least the point being, I encourage, when you're saying like not to challenge your question, I encourage that. I hope that people, like, if they find something I'm wrong saying that's incorrect, tell me. I mean, I've always wanted, that's been my genuine intention, is to get things accurate. And my background on the trading floor was good practice. And there's, I try to distinguish between what I want or what I feel, or, that's why I don't say the price target is this. Well, a lot could happen, but anyway, any comment on any of that, my friend?
Oh yeah. So I'll tell you what, you have guys like Ted that have, I wouldn't even known to look at the OCC report. So it's great because you get a lot of people, looking at this stuff. It's kind of like a peer review in a sense, where you can kind of, I know when you make these kind of accusations or whatever towards a Jeff Christian, he swats it away. Well, let's get some bulletproof evidence, and let's forensically go through this evidence and make it the best we can. So when we go and somebody like him, I know, look, I know a lot of people don't like him too much, but guys like him make a lot of money by being right a lot. And I'll tell you what, if you had clear and convincing evidence, someone like him, I think would listen to certain things. But you have a lot of guys out there throwing some stuff out there, and he just dismisses it because a lot of times, again, it is what it is. I mean, we've gone through grad school and stuff, and we know what it's like writing papers, and we want to have the best possible information that we have. And so anyway, looking at something like that over his shoulder and just kind of looking at, what exactly he was looking at, it helped me understand where I could even find some of this stuff. So lastly with that, there was something with them getting fined $921 million. I think it was in one of your interviews, actually, in your book, where I guess JP Morgan back in the day was told they would have to sell a lot of their pile away. Right now, I ask you this: if you're sitting on a 300 or 400 million ounce pile of silver, how do you actually sell that? Do you turn around and sell it all and then crater the price of silver? Or potentially, do you lease it out to people who can then, over the course of time, sell it? And then you're locked into a price where it's like a car, I think, where if you lease the silver out, you have a buyout price if you don't give it back. So if you're a JP Morgan, if you are, and if you're told that you have to sell your hoard of 200 or 400 million ounces, you can't turn around next week and sell it, but you can lease it out. And then eventually when that lease ends, you either get the fair market value for that at the time of the lease, or you get the metal back. And then you turn around, you lease it out again. So it's quite possible that you do have the Bank of America leasing this out and turn around and selling it short. But there's no evidence that it was 800 million sold short. I do have evidence, obviously, of
Nathan.
Yeah.
Again, we have some evidence of what you are saying supported by the data. And I don't know, Ted may be right, but here you have JP Morgan 6,500 and they issued 1423. There's that big 22. Then here's Bank of America.
That's just a couple of days ago.
Here they have
wow.
December 49.49, then stopping 1851. I don't know
okay, that's exactly
what to make of that, but again, What
Oh,
I
that's
could,
them. Yeah, that's them going long. So
although
that,
fortunately, the good news, oh, look, the CFTC holding wrongdoers accountable. Look, federal court orders Kentucky resident to pay 17 million. I have a surprise coming for Rusty. Are you excited for the Silver Squeeze anniversary coming up this weekend, Nathan?
well, I absolutely. I had an epic day on that, by the way, but then the next day kind of really sucked. So let's have a better year this year.
Yeah, well, fortunately, Rosty's officially in charge now, and in addition to holding wrongdoers accountable, there's Rosty sworn in as the 15th chairman. Very exciting news. Now, this is also coming up in the anniversary because last year on February 1st, one day before the silver market fell 10%, while the greatest demand in silver history was recorded, according to a variety of sources that iShares SLV representatives do not really care to discuss or don't know the answer to. Although when I called them February 5th asking some questions, they never mentioned those prospectus changes on February 3rd in between Jeff Curry's fraudulent
Yep.
February 2nd and 4th appearances. But now that Rosty's had a year to think about it, I mean, he's got the support of Joe Biden, who's got quite a stunning track record of his own. Hope the kids aren't watching this one, but Rosty said he was launching a silver investigation February 1st. So now here we are, February, coming up on February 1st, a year later. What do you think he might have found?
I don't think they found much of anything because they weren't really looking too closely. I don't think. I mean, Ronan Manley covered a lot of that as it was going on, as did you. I ended up writing something about it a couple months ago that silver definitely should have been $50, but that miraculous 100 million ounces or whatever that supposedly was brought into the vault, and then I guess a couple months later there was a mysteriously they were off by 100 million ounces or so in their books. I mean, they had what, 1 billion ounces in the vault there for LBMA. How do you just misplace 10% of the entire vault? That's kind of like your job. That's like under the you got one job thing. Count silver. You're off by 10%. Yeah, I can see if a bar or two went kind of sideways, but I mean, Ronan and you covered this in depth, and then I went through and I said, look, we should have definitely had $50 silver easily. Can you imagine SLV had to go out into the spot market and find 100 million ounces like in a day? What would that have done? But no, they mysteriously had, suspected to have 100 million ounces kind of shipped in, and all of you guys talked about the lunacy of that. I mean, if it was in the vault, that's one thing. You take a label and you slap it from one to the other and you just change it in the back end in a database. I get that, but they were actually physically talking about adding stockpiles to it. And then that 100 million ounces sort of just disappeared a month or two later when they did an audit, and that just, what happened to that report? And they didn't even name which one of the vault caretakers had that problem. But I mean, there's only a handful of them that could have misplaced 100 million ounces. It's kind of just ridiculous. I mean,
it's completely ridiculous. And Nathan, I mean, I don't know if you've heard. I mean, I'm ready to take a break from all this silver nonsense and play some music, just relax a little bit. But I was thinking before we give you back the screen share, I was thinking maybe we could write a song called Chairman Rusty B at 202-418-5575. And everyone can sing along and repeat it at home. Let's give out that number two more times. That's 202-418-5575 for chairman, official chairman. He's not acting like the chairman anymore. We're going to get the real deal this year. And you can reach Rostin Benham yourself at 202-418-5575. Nathan, you know how I feel about it, but would you encourage people at home to call Rostin and ask some of these questions, which he talks with the banks about? And I know that somewhere on here, there was like his schedule. It looks like he's doing another banker committee meeting where maybe they're talking about future price tamponage or what would you say there?
I think it would actually be kind of interesting to I don't know, get your local representatives involved with some of this stuff. I know some of them would be very interested. I don't know if anybody wants to contact Mooney about some of this, but he was the one that was asking for, audits of the Fed and the gold. So, I mean, I'm sure there's some Congress people that might be also interested in some of this. So,
You'd
but
think.
I heard that I saw some comments for your last one on this, and apparently a bunch of people were calling and people are saying stop calling. So I think you had an effect, and then some people were like, why are you calling? Stop calling. So yeah, I think you may have had an effect with people calling the number. So I got one other thing here I wanted to kind of go over quickly about how I got to my price, and then I can call it a day with you here.
Sure, please.
But yeah, so I'll tell you what.
Nibbles is getting very excited about this point, I might add.
So okay, so I was talking about how I think it's going to finish just under 24. Obviously, it can finish at 23.66, 23.30. I don't know. And for me to say a specific dollar and cent amount, I mean, that would probably be about the dumbest thing I can do. But what I can say,
what does your intuition tell you?
Well, what I'm building to is I think it's going to finish just shy of 24. I think maybe if it naturally goes down a little bit to 23.55, okay. But I don't think that they're going to go deep into shorting here, just because again, it's a potentially risk-off environment. So with that, I'm looking at this, and I did a thing with Kevin Wadsworth and Patrick Cream a while back, and I went over a bunch of charts, and these guys got me involved with the arcs and all that fun stuff. And Kevin is a meteorologist by trade, and it got me talking with him about the cone of certainty. If you're doing like a hurricane, and that loop that comes up, and the probability. So I would like to look at silver within probabilities of where it may be going, rather than saying, next week it's going to be $23.36. I kind of want people to look at this cone of certainty, if you will. So that's kind of what we're looking at here. You see that the green circle here?
Yep.
Okay. So that's kind of what I'm looking at here, where I think it's going. I drew out these lines a couple weeks ago, and bam, it blew right up over it. But with this, I wanted to take a big picture about gold, just for what I'm looking at here. And I know a lot of the technical guys out there, they go lines, like here's the resistance line and here's the support line. And I mean, I get it. And they're all probably right. But when I'm looking at this stuff, I kind of look at like zones. And if you look back at gold back in 2011 or so, you can see it shot up over 1750 or so, shot up, it consolidated back, but you could see it tried poking over this 1800, what was it, 1775 or so resistance line. It tried poking its head up over a couple times, and then it failed down. Now with this arc on the other side of this, it shot up over it, and now it's gone down a few times, and now you can see that this previous resistance line is now become a support zone. So I'm calling it like a band, where you can see it goes down and pops up, down and pops up. So it's like this beach ball. And now we're working on like a double bottom with gold. Gold is looking pretty good in my eyes. But with silver, I did kind of the same thing. I did this resistance band here. And you can kind of see where the top of this band is and the bottom of this band. And that's where I was looking at this price range, where I could see this going to, where I was, let's call it low end of 2290 to high end of 2338, where I felt it would test this. And it got pretty damn close today. It doesn't mean can't go down through this. I mean, but I think the likelihood of it bouncing off of this is stronger than not. Now, I think, if this was that risk on environment, and tomorrow the stock market rallies 2000, $23 is definitely in play, because they will short the hell out of it then. But to me, it just looks like, I think we got some real good times ahead. And I think people want everything where Lambo tomorrow. And if you just look at this stuff, this sawtooth patterns, this happens, I think this, it's quite possible if you do have a Bank of America or the like that is now in the business of going long, it's quite possible every month now when options expirations happen, we might be having the conversation on the other way of let's see how high it might go. So right now, I think that's what broke last month. I think this month might be a little bit of a neutral, but we'll see where it goes. I'm hopeful that it's just under 24, and if there's some really bearish news, and I mean it's quite possible, you know, the 10-year can go in the tank real quick for rates, and all of a sudden we see metals shoot up. So gold held in very strong today. And with that, I think silver's going to be kind of hanging around where it's at right now. You know, do you have a crystal ball? I don't know. Do you have one there? Because you definitely called it a couple months ago, right where the puts and the calls were. So, you know, this month we'll see where it goes. I'm thinking like a 23.90, 23.95. I think it's just going to kind of chew along sideways. And you're calling 23. So it would be
I
interesting to
would
see
say I would expect somewhere between 23 and 24. I would say if it ever went up $1 tomorrow,
if
then I would be on high alert. That would at least be an initial step towards, hey, maybe something is changing on a bigger level. Now, there's a lot of signs that suggest that that's incredibly close. So, you know, again, that's why I just want to introduce information that is what I'm thinking about. And Nathan, I sure appreciate you being here today. Is there a way folks can reach you? I know you have a Twitter account going.
I'm pretty active on Twitter at NateFishPA. I do a free newsletter whenever I get some time to send out to some people. I got a few hundred people I send it out to now. I have fun doing it. It's not my career, so I do this kind of on the side. So I used to put out some videos, but I got no time these days. So find me on Twitter. I have a lot of fun there. I interact with a lot of people. I mean, I'm just some regular dude here, guys. So, you know, let's have fun. Let's there's a group of us that just go back and forth all the time on Twitter. So let's have fun with it, guys. So
have fun, spin it around. Nathan, well, I appreciate that. And yeah, folks, contact him on Twitter. That will be in the description field below. And before we wrap up, and I say thank you again to Nathan, I would like to mention that tonight's show was brought to you by Kuya Silver, run by David Stein. Looks like they have a webinar coming January 26th, which would be Wednesday in just 2 days, 4 p.m. Eastern, 1 p.m. Pacific. And they also had some news out, which I'm sure they will be discussing at said webinar. And fortunately, David Stein checked in with us, and here you go.
Thanks, Chris. Today we have a very quick update, but it's a really important one. We are very happy to announce that we've received the authorization for the construction of our Bethania process plant. That is the most important piece of the Bethania expansion project, which is to build our own plant at site so we can process the ore from the Bethania mine. It's something our team's been working on for the past, well, more than a year, and very pleased that we've got it done. I'm so happy. The team in Peru is really demonstrating with this authorization, which is a critical one, as well as the EIA approval we got in late 2020. That we can really get things done in Peru. Our team is building a track record of being able to, to deliver these kinds of, permits, licenses, authorizations that you really need to grow a mining company wherever you are, but Peru included. So we're really, really happy. I think it also speaks to the fact that, despite some of the tension in the market around the political situation in Peru, again, we've been able to, we've been able to, run our company more or less in the status quo. And Peru is a really great mining country. Their mining laws are very fair. to both locals and international investors, and we are very, very thrilled to be able to move this project forward. We also announced a new board member who also happens to be a Peruvian executive, Javier Del Rio. So that's good kind of timing on that front as well. He's from Hudbay, senior exec at Hudbay, and we're very, very excited to have him as part of our team now. And finally, we are going to do a webinar to discuss the mineral resource estimate. We can discuss this construction authorization and anything else that may be topical in a couple of days on Wednesday at 4 p.m. Eastern. So please go to our website and register for that if you're interested in attending. Thanks a lot.
All right. So thank you, David. Thank you, Nathan. Everybody at home, thank you for being here. Hit the subscribe button and notification bell, and we'll see you again soon.